Ladies and gentlemen, thank you so much for tuning in. Welcome to the Exchange the Blocks APAC focused webinar series. I'm your guide for this evening, or this morning, I should say, conversation. Frank Chaparro, Director of News at The Block, and we have an excellent panel bringing the West and the East together. We have Michael Sonnenschein, the Managing Director, but now I think we've upgraded your title, right? I've noticed you in the press recently as being referred to as the CEO, Grayscale Investments. In any case, he is at the helm, leading what is basically the largest asset manager in the crypto space. Michael Sonnenschein, thank you so much for joining us.
Good to be here.
Thank you very much. We also are waiting on Daniel Yan, the COO of Matrixport, a burgeoning new firm out there in Asia in the derivatives and trading and lending space, waiting for him to get back on. A few technical difficulties, as is commonplace in these trying COVID times. We have Kyle Davies, the co-founder and chairman of Three Arrows Capital. That was a slip up because they're known for being such chads over there at Three Arrows Capital. And of course, last but not least, we have Seth Gins, head of liquid investments and a managing partner at CoinFund. Thank you, gentlemen, for joining us this evening. We will be discussing the various, product developments that are happening across Asia and in the West, and where there are differences and similarities betwixt the twain. I'll start with you, Kyle, since you were the first one to hop on before we turn the mics on live. We were talking about whether or not momentum was maybe shifting more towards Asia. And we were talking about, well, what exactly is Asia when we talk about this region in a crypto context, right? Our impression at The Block, especially amidst these interesting DeFi developments, we've noticed that a lot of the action is being driven by Asia, and constantly when we're watching prices run up and things like YFI as an example, right, or any of these tokens, we're often thinking, well, let's see what happens when Asia comes online later this evening, and then we'll know if it sticks or not. So without getting too much into the granularities of what exactly is Asia from a crypto trading perspective, would you say that the region itself is maybe becoming more important as a source of liquidity, as a sort of central point of liquidity, and is maybe driving momentum in some of these tokens more so than maybe 6 months ago?
I think there's always a looking at the other side, or looking at the unknown, right? So Asia is a huge ball of capital. It's also pretty diverse. The Chinese market is very different than the Japanese market, Korea, Southeast Asia. I'm in Singapore. So for DeFi in particular, I think a lot of the development has happened in the US. A lot of the communities have been centered in Asia, actually. And by Asia, I mean Singapore, Hong Kong. There are some other communities as well, but I think that has been the outsized influence. If you want to talk about outsized influence on the market recently in DeFi, I would say it's Singapore, Hong Kong, handful of firms. It's a community, and it's just people that are very passionate. And the nice thing about DeFi too is it's very much community-led. That's kind of the whole point, right? That users, community members have influence via governance or trading over the direction of protocols. And they all kind of interact too. So if you're invested in one or part of one community, you might partner with another community, and that seems to work out quite well. So that's what we saw playing out in the last DeFi run.
Mm-hmm, mm-hmm. I think that's pretty spot on. I guess obviously we need to talk about the recent price run in BTC and Ethereum and some of the other large caps over the past 24 hours. What's behind that? Is that, in your opinion, also maybe more heavily being driven by folks in Asia?
I think a lot of people were caught flat-footed here, actually. I think there was, I think the market was behind on some of the DeFi movements. These were generally new entrants or new community members, people that were not exceedingly wealthy 2 years ago, but now have like, our community members that have significant influence. Then I think we saw the ETH move. This was maybe other non-community members, but this was maybe BTC holders or people with dry powder on the sidelines that kind of missed that run and then sort of catalyzed like the ETH run when they saw all the transactions on ETH. And now I think we're seeing that play out to Bitcoin. There's the Bitcoin movement I see as very much, particularly last night's move, driven out of the US. Maybe Michael can speak more about it, but I think it's very much driven out of the US. I called all my favorite OTC desks this morning to ask about flows and color, and universally, pretty much, Asia was a mixed bag. Minor sellers, transitions into ETH, but some buyers of Bitcoin, but it wasn't like a strong flow. It was very much US retail, US institutions. That was the flow for last night.
Michael, I wonder if the reason behind that is I'm getting a weird reverberation. All right, I think that's gone. Michael, to what degree do you think that might have to do with the fact that most of the US institutions really can't play around with DeFi to the same extent that maybe some more sophisticated institutional players might be able to in the Asian region where, the regulations are a little bit, less heavy-handed. Do you think large institutions here in the States were maybe sort of not getting their hands too dirty with DeFi and just sitting on the sidelines waiting for the shoe to drop in terms of Bitcoin vol, and then, as soon as that happened, they kind of have opened the floodgates, and now we are where we are?
Yeah, I think from our perspective, we're primarily dealing with institutional investors. And I think even when you look back to even March and the onset of COVID and stay-at-home orders and kind of the way that we've seen governments both domestically and abroad react with just the unlimited, quantitative easing that's been injected into the system, you really are having investors spend more time than we've ever seen them before understanding the asset class, educating themselves on it. And so, Frank, I think you're probably right that there are some opportunities that are going to be untenable for certain investors because they operate in less regulated areas of the world. There are less guardrails around them. But I also think that one of the things that a lot of investors are very keyed into is this idea of scarcity, right? And looking at how many more dollars can we put into circulation? How many more euros can we put into circulation? Can we print ourselves out of this problem? And what do assets like Bitcoin and maybe some other protocols that have fixed supplies, how do those fit into portfolio construction? How do those hold up in a world that's characterized by unlimited quantitative easing? And when you think about that, combined with where Bitcoin and some of these other large cap assets have been over the past few months, investors have been looking back historically about what happens when you have these, relatively prolonged periods of low volatility. And historically, they do act as a precursor for a pretty meaningful movement in the price one way or the other. And so I think Kyle is actually spot on in saying that, some people were actually caught flat-footed for this move, and you may see some people trying to chase or whatever it may be. But, I think I'm not surprised to see that, with the amount of attention and focus and investment that the space is getting amidst a world that's completely digital, ever more so since COVID, to see, a breakout in one direction or another. And thankfully, to a lot of people's, benefit at the moment, we're seeing a breakout to the upside.
Can I just add one?
Yeah, go ahead,
point?
Kyle. Go ahead. Yeah, go ahead.
One of my favorite quotes is, "Show me the incentives, I'll show you the outcome." And one of the biggest incentives here is tax. So Singapore and Hong Kong have a huge outsized influence on the DeFi market. You know why? Zero cap gains tax. They can play around and they don't have to be worried about every transaction getting short-term capital gains. In the US, Grayscale, massive influence on the market. Largest crypto asset manager globally. Why? Because you can trade in your 401k. huge tax incentives for Americans. So I think show me the incentives, I'll show you the outcome. That's why these markets are evolving the way they are.
Interesting. When you say evolving the way they are, what do you mean? What do you mean specifically by that? That you're seeing action. You're seeing action in Singapore and Hong Kong and the growth of firms like Grayscale specifically.
Right. So, okay, I guess a couple things we can talk about. One is DeFi. DeFi in Asia is different per country. Taxes are high in China, Korea, Japan, which are the three largest markets here. Taxes are zero cap gains in Singapore, Hong Kong. The DeFi movement has largely been in Singapore, Hong Kong so far. They've been trading firms, community members here. And the coins have relatively small circulating supplies. So for Singapore, Hong Kong investors to have an outsized influence on the market is not hard. It's just by a couple million here or there, you have already moved the price like substantially, right? Bitcoin's a little bit different. Bitcoin is big money, right? So they're miners in China or whatever, but if you want to see how people are interacting with Bitcoin, show me their taxes and I'll show you what they're going to buy. And in America, they buy Grayscale.
Mm-hmm, mm-hmm. So what are they buying? What are they buying in Asia, Daniel? We'll give you a chance to check on your audio. If in America the incentives are such that Grayscale is an attractive product, and we see it as an attractive product given the AUM that is often touted, much as it should be, But Daniel, what are the products that are hearing some of this reverberation? So, everyone, remember to mute yourselves as I talk so that we don't have to deal with that. Daniel, you guys are in the business of making products tied to this nascent burgeoning market. What are some of the products that would be tailored more so to traders out in Asia and investors out in Asia that you guys have developed or are working on, or see your competitors developing or working on?
Can you hear me?
I can hear you.
Frank?
I can, yes. That's Daniel.
You can hear me now, right?
I can, yes. Reminds you of that old Sprint
Oh,
commercial.
thank you so
Was
much.
it Verizon? Yeah, no, of course, yeah. Can you hear me now?
I think there's some issue when the phone is very close to the computer. So I'm just looking away from the computer. So I'm sorry about the connection thing. So to answer
no
the
worries.
question, what are Asia customers doing with us? So I think first of all, in the past 1 year, one very important area of growth is the wealth management area. Basically, customers, they used to know that they can speculate with their coins. They buy, sell Bitcoin and also all the shitcoins, all those things together. But in the end of 2019, start 2020, people realized that they can actually earn yield on their coins. I mean, DeFi is definitely one area where you can earn yield. But for us, we're focusing on how to provide yield for coins like BTC. And so we provide fixed income products and flexible income products, and also incorporating options into the structure where customers can earn yield on their option carry. So that has been definitely one area of growth. And actually, if you look at derivatives, out of their 10,000 to 20,000 BTC trading volume, less than 40,000 BTC, a lot of them are coming from Asia institutions or retail selling vol directly or indirectly to earn yield. So that actually explains why vol has been dampening so fast going into the past 1 week, where implied vol goes like 30-35, and also explains when Bitcoin explodes through 10,000 and then 10,500, why there's so many buying flow on call and why the vol actually moved extremely faster and higher. We know that some of the players in China have actually been short gamma and been hurt by this move, and they've been scrambling to buy. And the one area where you can look at is look at the call vol and the put vol. On the short dated, 10,000 to 11,000. There has been extreme premium of 8 to 10 vol even before this whole move last night. So yeah, back to your question is, there's a lot of volume options from Asia community. I think more than 50% is Asia related. There are gains, there are pains, but the market is growing.
Yeah, I mean, the growth of the options market has been apparent in Asia specifically, but across the crypto world. It's something, Kyle, we were talking about a couple of weeks ago, options as a mechanism through which you can, squeeze alpha out of a low volatility regime. The growth has continued unabated. What do you think from a customer trading perspective do you need or look for when you're trying to discover the best option product to trade, right? Because now there's never been more options, no pun intended, than ever before, right? Deribit, OKX, you have optionality in CME's product, right? You have FTX as well with their own options market. You have Bakkt also with its own options market. So none of these are sort of built the same, right? You have some order book based options market. You have bespoke contracts that you can sort of trade bilaterally. There are many different options, needless to say. So what do you think traders at maybe the US are looking for, and what are maybe traders in Asia looking for? And then maybe even you could talk about you guys. Yeah, we're all looking for yield, right? But
we're all looking for liquidity. That's what I was going to say.
Liquidity. Oh, go ahead.
And yesterday, Deribit traded a record $540 million, 47,000 BTC of their Bitcoin option, and about 50 million or so of their ETH option. So the liquidity is getting better. It's not perfect. We trade actually quite a bit of both of those options. We're not a market maker, by the way. We are very much a taker. We are a user of the options, and we have been using it for. We use, our collateral and our balance sheet for many different trades, but a lot of it we want to maintain our exposure to the market. So if we want to maintain our Bitcoin exposure, sometimes the best thing to do is to buy some upside, especially if it was really cheap, because volatility had come off a lot. I mean, implied options or implied volatility was trading around like 45, 50, something like that, which is just way too cheap for Bitcoin. Now it's popped. But basically, yeah, we saw it as an opportunity to load up on some calls, not because, necessarily we wanted to do a specific trade. It was much more because we wanted to be efficient about our collateral and retain our exposure to the ETH and BTC market. So that's how we participate. But many people participate in many different ways. There's mining hedgers, there's realized versus implied traders, there's market makers, there's yield traders that just want to sell covered options, get the yield. And there's many ways you can do it. You can, Deribit is 85+% of the market, so all of it comes back to them. But that's more for like professional traders, really. There's some other retail in there, but it's definitely the highest, the high volume one. Everyone just builds on top. So CME, if you're US and you're regulated and you want to trade only on a regulated, you trade on CME. If you want to trade in China, OKX, that's your option. I think Matrixport's coming out with something too soon. So, but there are many different things. It just all comes back to Deribit, because that you need to trade on the liquidity. So it's much more about accessing the market in different ways, and it's about growing the options market. The options market is still too small in crypto.
I think that's something that Daniel can probably speak to. How do you compete on the liquidity front in launching a similar market or product? And, what do you bring to the table that moves the needle forward?
Yeah, absolutely. Thank you for the question. First of all, I think Kyle is right that liquidity is the key to everything. But what we don't agree is the liquidity will stay on Deribit for 85% and more. The reasons are as such. Number one, as we have seen in the future markets, BitMEX used to be number one, 90% high, 90% above. But why we got into a market that there are 4 to 5 major exchanges sharing, like 15 to 20% each, is not because BitMEX is not doing their best job, or simply because there are people from different geographical backgrounds, from different trading backgrounds, they have their preferences over the venue they want to trade. And, once you get the liquidity up to speed, it's, diversification of your assets into different platforms. So that's not a problem. But to address this, obviously the answer to where can a new platform acquire liquidity is very important. So on this front, I'm definitely not trying to advertise for our platform on this call, but I try to be more neutral. So for a new platform, basically you need to access to these. Number one, the active takers who are basically taking liquidity from the market. Number two, the active makers who are providing liquidity to the platform. And number three, you need to have the technological infrastructure that's good enough for you to basically withstand any market volatility and be able to transact in volume and in high frequency and low latency. So if a new venue can manage to acquire these three through different kind of incentives, through their technological edge, then it's definitely possible for new platforms to gain 20-30% market share in a year's time. And on liquidity-wise, I think right now the price discovery on Deribit is not the best yet, and that's some area that Bit.com is trying to address, and we have some plans which can be very effective in 2 to 3 months.
One thing no, go ahead, Kyle.
Yeah, it's all about
yeah.
client. So if you have a captive client, like if you're Binance and you have a captive client, then you can offer them many different things. You can offer them spot, futures, options, whatever, right? And it's all, I think a lot of it's about that, like bringing in new clients. Options are still 1% of the derivatives market. This needs to grow. This pie needs to grow. So the primary source of liquidity is going to be Deribit for a long time, I think, just given where, how primary source liquidity works. But when it comes to growing the market and actually things that build on top have higher margins. Binance's margins are huge on options. I have no doubt that guys like FTX or others will build high margin businesses too. It's just more about where does risk get transferred? That happens, in certain venues. Where does captive client flow happen? That happens in certain venues. And we need to see more. We need to see a lot more focus on options. Volumes were big yesterday, but they're still not high enough. It needs to be a much higher percentage of the market.
One theme that I think underpins this debate is obviously the fact that a firm's market share 1 year or 1 month is not going to be guaranteed the next month or a year later. And I think BitMEX provides one good example of that, right? What a firm that was once the king of liquidity in a product that they invented, right? The perpetual swap, they now, the size of their market share has diminished to a large extent and has ceded to, new players like Binance and OKX, et cetera. I guess kind of looking at that more broadly, right? Looking at the competitive landscape across crypto service providers, whether they be exchanges or market makers, whatever have you. We saw sort of Binance come in 2017, 2018, really starting to dominate Western-based exchanges like Coinbase and Kraken. We can unpack some of those trends, but Michael, I'd be very curious to hear from your perspective. It's a question I've never asked you, and I've never even thought about it. But
yeah,
what's to stop a Binance equivalent, an Asian-based, maybe more scrappy, more nimble version of your firm to come to fruition and eat market share?
Well, so I think if you're talking about the development of access products and investment products around the asset class, there are definitely folks who are talented, scrappy, driven, who are, coming to market, and if they're not already, will be coming to market. And I think on that front, there's certainly plenty of seats left at the table and plenty of food left on the table. We cannot be the only folks, that are bringing investors into the asset class in a regulated way through financial products that look, act, and feel like the other investments that they make. And so over time, I think a rising tide lifts all boats. I think at the moment where we're actually seeing a lot more competition shake out is really not so much on the asset management front, but probably more so on the prime brokerage front. And so I know a lot of you have been keyed into this, and Frank, you've done some top-notch reporting around it as well. So let's start there.
I'm working very hard not to smile or blush. I think this is a really great opportunity to bring in Seth, who's been quietly and very patiently and respectfully waiting for his moment to shine.
Let's give it to him.
Seth, the only reason I apologize, I only have 4 cameras here on the right side of my screen.
About me.
And Andreas, our one of our operations guys, is taking up this 5th window, so I can't even see you, which is unfortunate because
Frank, you can't expand that, right?
Oh, I have no idea. I barely could get the Zoom to turn on for this webinar.
Well,
Seth,
can I finish my thought before we pass it to Seth? Because
yes, yeah. Well, you were talking about how great my reporting was, so I got distracted. So go ahead. Yeah. So yes, the prime broker wars are playing out.
Prime broker wars are heating up, right? And I think that what that evidence is, or what should be evidence from that, is this idea that investors are not just looking to go directionally long crypto or directly short crypto anymore. They're looking to find a one-stop shop solution, right? The ability to have a singular relationship where they get access to capital, they get trading spot, trading futures, lending and borrowing, derivatives, and again, the institutions that we're dealing with, those are folks that are used to seeing all those capabilities around all the other asset classes they trade. Crypto can't sit on the sidelines and not offer that. And so I think it's an important thing for us all to be watching and to see whether or not the prime brokerage wars heat up, or they each find their own niche, whether it's geographically or by client type or whatever it is, but something we're certainly watching.
So Seth, you're definitely watching this as well, alongside Michael. You see the news updates, you see the headlines. Firm X is venturing into prime brokerage vis-a-vis. We're going to maybe extend credit so that you can trade across various markets, or we're going to acquire Tagomi so that you can maybe have orders routed to multiple venues, or we're going to acquire a custodian and maybe offer a more fuller experience from a trading perspective, which Grayscale's sister company, Genesis, did. As an investor who is obviously, looking for tools that will make it easier for them to access liquidity and trade in this market, do any of these products at this point, do they seem appealing? What sort of sticking right now? I'm sure you're getting tons of inbounds, tons of business development type emails from folks trying to get you to try their stuff. What's your opinion thus far?
Yeah, Frank, it's interesting. So my background is in equities. I was an equity investor for 18 years. And then, as you know, I joined full-time at CoinFund at the beginning of this year. One of the big drivers of that decision was the fact that from 2017 to today, the financial infrastructure in the space has just matured immensely. So if you think about back in 2017, no institutional grade custodians. Now you have a good number of institutional grade custodians. Prime brokers, as we're talking about. No prime brokers. You had the exchange arb in 2017, where Bitcoin was trading at different prices just about everywhere. Now you have a number of high quality PBs, and the exchange arb for the most part is gone. So from 2017 to today, and then look at futures, we got futures second to last week of December 2017. As Kyle was talking about, futures lead to options, lead to structured products. So A lot of development there, and all of that makes the asset class that much more ready, that much more welcoming for institutional capital. So we're all over the offerings that are out there. We use many of them. Happy customer of different parts of Michael's organization, of Coinbase, of the different derivatives exchanges, whether it's Deribit, LedgerX. Really, it's those dynamics that are making this institution ready. And I think that's part of what we saw today. I mean, we were involved in a Cap Intro conference last week, the inaugural digital asset fund track of a fairly big Cap Intro conference. And a lot of the discussions were around education, believing that this is a real asset class, that it's here to stay, wanting to know much more about it. And then usually sprinkled in is this idea that, and by the way, we're probably not going to get super engaged until the price starts to move on Bitcoin. So I think you're seeing a little bit of that activity. And that's one of the reasons why I think we're likely to see some follow through in the medium term on the move we've seen in the last 48 hours.
No, it's a good point. I actually had the guys at CMS trading on, and we were sort of talking about this this current environment of cooperation, coopetition is sort of the word that's thrown about on Wall Street. And to a degree, many of the firms that are looking to get into prime brokerage up until this point have been firms that have sort of worked and engaged with each other, since the earlier days of this industry. But I wonder if that's going to start to change, right? Is there going to be a point in time in which, certain counterparties maybe are going to be a little bit more aggressive with each other as a result of them really being squarely in the same business operations, and maybe that pie grows, but at the same time, there's going to be a moment when maybe things get a little bit more violent.
Absolutely. I think you're also going to see a lot more consolidation, and that's going to be consolidation within crypto. But now with the notice last week from the Office of the Controller of the Currency here in the States that banks can custody crypto, I think you're going to have a lot of banks saying, how can we be involved in crypto? Who should we be talking to from a partnership perspective? I think we're likely to see a Coinbase IPO fairly soon. That again will be a big awareness event for the space, a big education event. Everyone on Wall Street is going to be sharpening their pencils saying, okay, crypto didn't die after 2017. It didn't die in 2018 and 2019. It's back. We've had a very strong 2019, a very strong start to 2020. Maybe we should be doing more in the space. So
lots of positive vibes.
Lots of positive stuff going on.
So here's a question, and we kind of got Seth's take on it from the U.S. vantage point. Kyle and Dan maybe can weigh in, and Michael, of course, can weigh in on the U.S. side too. But I want to go back to Asia. The OCC announcement, we're all aware. I think most of our listeners are going to be aware of sort of this green light, effectively, that the Office of the Comptroller of Currency gave, that effectively allows the majority, I think, of federal savings banks to custody digital assets, cryptocurrencies, and maybe even do things like staking and et cetera. Kyle, does this matter from your vantage point in Singapore as an investor, as a trader, or not necessarily?
100% matters. It's
Why?
one
Yeah.
up. Like once one bank offers it, the other one has to offer it. The next one will outcompete it. The next country will offer it. We're aware that there's a couple countries that are going to start offering things similarly soon too, already. But it's that like the U.S. leading here is huge. It's absolutely huge. It really can't be overstated.
Mm-hmm. Michael, I want to bring you into the fold on this. What does that mean for Grayscale, for one, and has it? To what degree do you think maybe it's playing into this price movement we've seen?
I mean, I think, we have to realize a lot of people's naivete here. I'm not sure that many people even knew what the office of the controller of the currency was before this announcement last week, to be honest. And what in fact their powers actually are here. And so I actually don't even feel like outside of crypto, this has yet been digested enough, right? Within our very small community, I think people very quickly, said, wow, what a big move this is. And this is the exact kind of an announcement we've been waiting for and wanting to see. But outside of crypto, I don't think the popular press or, people even at major banks really fully understand this. I think our team is digesting this as it really being, if at all, maybe the last excuse a major financial institution might have to, which is no longer on the table, to ignore doing something in the asset class, right? And so if you look at a major bank, a custodial bank, you've seen in some folks' part, sometimes getting difficulty with, amending certain kinds of broker-dealer licenses or other, kinds of regulatory filings in order to handle crypto assets. Well, now all of those internal working groups and all of those proofs of concepts and, all of the internal champions at these banks now finally have a little bit of fodder behind themselves to actually move some more things forward. And I think that will probably cause us to see some consolidation in the space. But I think, in talking about the prime broker wars, we were talking a little bit about M&A activity, which has led to some of that heating up. But I think you'll see a couple of different approaches by some major institutions that as crypto goes through another price run, whether it's this or, some other run or some other price movement that comes up, you're going to have to see each of them make their own strategy. And whether or not they build to get their clients into the asset class or they acquire obviously remains to be seen. But, if they're not adequately prepared for when their clients want it, they're going to be caught flat-footed and lose out to a lot of the great companies and products and services that have been built and continue to be built in the space. So too early to say what the immediate reaction is going to be, but certainly something that we take as a very important milestone for the asset class as a whole.
I think that happens sometimes as a push and sometimes as a pull too. So if someone like Grayscale or Fidelity or like a large institution straight from the top says, we're going to dominate the crypto market, that they pull up the whole organization and they just dominate the space. Sometimes it's a push though. Sometimes it's like, maybe a larger institution, I don't want to give names, but that says, oh, we have to have a crypto offering now. We have to do this. And that's not as strong. It's not as strong at all. So I think that this kind of like regulation that pulls up everyone, and I think it's really powerful, basically. I think it creates competition at a high level that pulls up the whole industry.
Sorry, I was muted there for a second. I still think the question whether or not it gets firms like JP Morgan or Citigroup, which have, well, I don't know about Morgan Stanley. Well, I don't know about JP Morgan if they've been doing custody. I know Citi and Goldman have to various degrees over the past 2 years. Whether or not this gets them into the market remains to be seen, but it raises an interesting question about the dichotomy between where maybe the large banks are, large financial institutions are in Asia versus the ones in the US, right? Like we have a really great example in CBI's investment, $30 million stake in crypto market making firm B2C2. Obviously, banks here in the US have also made investments in crypto firms. Goldman investing in BitGo provides a good example. But I have the sense, and I'd be curious to get everyone's take, do you think the largest financial institutions here in the US are maybe too slow to move? Maybe the OCC news changes it, but they appear to be far more slower than the larger institutions in Asia, Japan and maybe Singapore in particular. Is that, Kyle, is that your impression?
So you mentioned SBI, which is like the third largest broker. It's a huge conglomerate. They had like 180 entities. They have their own university. Like it is, and that is from the top that is driven. And that's why that's not their first investment in the crypto. They run huge mining and massive. That's an example of like from the top pulling up the whole organization. But Japan in general has been kind of weak. They've been like the FSA has kind of crushed the market, right? With a bunch of regulations. So Japan has been a lot less exciting, to be honest, from a crypto investment perspective in the past 2 years, I would say. I think we're looking more at other places. We're looking in China, Korea, Hong Kong, Singapore, maybe for new institutions that would enter from the top, pulling up.
So Dan, do you think that there are more institutions to use with that are pulling folks from the bottom to the top from a crypto perspective? Oh, sorry. Andreas is telling me that I was too far from the mic. Dan, I want to bring you in on this. Do you think that maybe there are more firms setting an example at the top that crypto is a priority that's then trickling down and resulting in more action in terms of getting involved in the space? He's having an issue with audio. We'll bring you back in a sec. Seth, what's your impression? Your lovely wood-paneled Connecticut home.
It's actually a little hard to hear you as well, Frank. I think there's been some surprising activity in the U.S. banking sector. It's still pretty marginal right now, but like USAA was an early investor in Coinbase. There were actually a number of other banks that came into a variety of Coinbase rounds. So I wouldn't characterize that as aggressively moving into crypto, particularly with these investments coming in the 2014 to 2016 timeframe. But there's been interest in crypto, and I think there continues to be interest in crypto. When I talk to people at the large banks in New York, there's a lot more interest than they publicly talk about. As you noted, a number of them are doing some activities in custody. But even banks that have moratoriums on their wealth managers interacting with crypto for the time being are still doing things internally with blockchain to understand it. They're doing research on Bitcoin, meaning they're publishing sell-side research on Bitcoin. And they're teeing up the relationships and the understanding to be able to take action over time. I had an interesting conversation with the head of wealth management a few months ago who was saying, when the 10-year is at 130 basis points, which is where it was at that time, and now it's obviously at 60 basis points. He said it's really hard for our wealth management business to make money. So they're looking for new lines of business. They're looking for businesses that have a lot of upside. I think a lot of people saw that Schwab survey, self-directed 401k survey from 3Q of 19 showing that millennials love GBTC. The number 5 holding in their self-directed 401k. So I think that there's starting to be this broader understanding that crypto has a role in wealth management and asset management. Everyone's trying to figure out exactly how it fits into their business, but there's absolutely interest. And there's absolutely a willingness to be educated. And at CoinFund, we're trying to do our part to do meetings with banks to help them get kind of the lay of the land and understand what's making us excited about crypto?
It's not just retail investors. Can everyone hear me now?
Yeah,
Yes.
much better.
Awesome. Yeah, great. I just had to tweak something underneath the desk. It's not just retail investors or retail traders that like Grayscale's GBTC. It's also firms like Three Arrows Capital and Coin Fund that have found a unique opportunity in this arbitrage trade that has become popular. Is that something that you notice a lot of different investors across Asia have become interested in or have been drawn to? Because a lot of the arbitrages have dried up, but this one's still sort of remain. Well, the exchange arbitrages that were once available.
Yeah, I mean, I think, Frank, at the end of the day, it's about, it's really just about access. I think a lot of investors, you know, we're all, I think, doing what we each can individually and in our firms to bring crypto to the masses. Great products and services are being built, but it still exists largely outside of their traditional ways that investors allocate money. There is no centralized order book. There is no centralized reference rate that everyone is looking to 24 hours a day, 7 days a week. And although we've made massive strides in weeding out some of the less compliant, less regulated folks, you know, crypto is still in early innings. And so I think, you know, a lot of the popularity that we've seen is really just because, again, we're talking about people who want access and exposure. And if we can provide that in a way that's regulated, compliant, and fits within what they already do, then that allows them to participate. Whereas if it wasn't available to them, they may still be on the sidelines. And I think that's really what it comes down to.
It's a good point.
I want to ask a question, an East versus West question. We're only talking about finance right now, all finance applications, finance companies, like trading infrastructure, but you've invested in a lot of things that are not, that are some obviously trading in infrastructure exchanges, but also some that are more for other tech applications. What do you, like, has that, what has happened there? At one point, people were talking about only decentralized world computer kinds of concepts. Now I feel like it's shifted in another way. Like, when is that going to come back? Is that real tech? Is it happening? When is it happening? What's your opinion there?
Is that for Seth?
Seth.
I haven't invested in anything. I've invested in this tie. That's about it. And this IKEA bed. Anyway, Seth, the question to you.
Absolutely, Kyle. You know, I think
it's a really good, salient question. By the way.
Yeah. We're seeing a lot of activity in DAOs, decentralized autonomous organizations. You know, for a moment, I thought that COVID was going to be the moment in the sun for Web3, because it was really an opportunity to have a contact tracing and health record app that what was based on existing Web3 rails and could be interoperable both across country borders. It could be interoperable from business to business, venue to venue, without leaving your personal data in each of these places. We've seen more centralized solutions kind of win out, and we see a lot less activity actually in the contact tracing realm. So that's petered out a little bit. But I think we're seeing a lot of the primitives for say identity, for instance, which are really critical to being able to kind of bring that Web3 vision to fruition. A lot of activity from startups. You know, $3, a company that we're invested in, but then also the majors, MasterCard, very big digital identity initiative, Microsoft, Facebook, the Calibra wallet, now called Novi. again, I think that's very much a digital identity play. It all comes back, though. I mean, we talk about finance, identity, Web3. They all merge together, though, at some point. And that's actually where you start to see some really fascinating crypto native dynamics, Web3 dynamics come together. And one of the things that comes to mind is kind of thinking about what Facebook could do with Libra, with the metadata that's being collected, but that's owned by the users. You could have marketplaces where you get paid for your data, but in a really seamless, non-hokey way. So imagine you like a particular type of sneaker. Well, why can't competitive sneaker brands see that data on an anonymized basis and give you free pairs of sneakers to try to get you to engage with their brand? So all of this is part of crypto. It's all adjacent to the core financial tech. It's all moving really quickly, and I think we're going to see a lot of exciting activity here in probably the next 12 to 18 months. Not 5 years out, but much sooner.
Oh, well, listen, you opened up the Libra can of worms, which I didn't think we'd get to during the course of this conversation. Another type of thing when we think about access products, a service, the company formerly known as Calibra, providing ramps to engage with this new cryptocurrency initiative, network, if you want to call it that. I want to kick it to Dan. I have a question about Libra and whether or not it would have any success in Asia. This whole mission that they have of banking the unbanked, which, you know, we can have a whole conversation about separately. But just from what we know about it, what we've talked about it, any chance, especially given what maybe the Chinese government is working on with their own central bank digital currency, that there will be any room for competition coming from an entity like a Facebook, even though they're not necessarily involved in the protocol aspect of that project?
Hey, thank you for the question, Frank.
Of course.
Oh, great, it's working. So I think it's a very good question, especially we take a DCEP into the picture. First of all, I think the Chinese government is definitely trying to make it work because from their own perspective, from the central bank's perspective, it's easier to regulate, cost less to distribute, and you know it takes out a few intermediary in between. So that looks like it's going to work. And with that in the background, well, the like of Libra work in China, I think it's a long shot because I think what we need to see first is how it evolves in the U.S. And you know the way Chinese look at things is, okay, before this Chinese-U.S. issue, the way Chinese regulators look at financial innovation is generally they see what's going on in the U.S. and when that is kind of stable, they start allow it to happen. Normally 2 to 3 years later, been late, but not in the game. But now with the new Chinese-U.S. kind of a political shenanigan about, you know, it's getting even more complicated. So I really don't know how to predict that. If you get my point.
No, that's interesting. Kyle, what say you?
I think everything comes back to an internet of value, which is more or less Seth's point. So it's all merging. It's a spectrum. You can talk about like actual fiat, you know, stable coins, but you can also talk about internet of value of other things, right? I think everything has to come back to an internet of value for my own naive brain anyways, because that's the whole point. Like, what was the founding of Bitcoin? It was creating digital scarcity on the internet, right? So everything that comes there from, for me, has to be an internet of value of some sort. And so yeah, I think if it's like a more centralized counterparty, you know, that can provide its own internet of value in some way. If it's you know, not specifically some certain more of like a Web3 product, that can create an internet of value. But yeah, I don't know. The narratives keep moving, and I think it's very much a competition of regulators. at this point to allow more, or competitions of countries to win more business, or competitions of companies, CEOs to create like new divisions. And I think we're going to see more of that kind of stuff. That's really maybe the main theme of the past 2 years, or maybe 1 year.
Fair enough. Well, gentlemen, we've had a very engaging, exciting hour. It feels like it's, for me, only like 9:30 p.m. instead of 11 p.m. So thank you for, honestly, I don't know how they even convinced me to do something this late in the evening. Normally I check out at 10 a.m. So the fact that I'm here at 10 a.m. doing work is really significant for me. I want to keep going just a little bit more. Everybody bear with me. I want to get everyone's closing thoughts on where they sort of see these two markets converging in a way that maybe they haven't before. Is it DeFi? We've talked about that. Is it Libra? We all kumbaya around Libra. Probably not. But what are maybe some of the trends that you see panning out that maybe brings East and West closer together? We'll start with you, Seth, and then we'll work our way down.
It's interesting. You said East and West. I was taking that question a different way. So what I actually see, I think central bank digital currencies are going to be like plugging DeFi into the traditional financial world. It's going to be a little bit of an earthquake. We're going to see some losers out of that. But then I think you're going to have massive winners emerge out of that as well. And really the key to that is having KYC at the edge and actually having that KYC dynamic play into DeFi, which then makes DeFi a primitive that's viable for fintech and challenger banks within the traditional banking system. So I actually, it's a little bit of a contrarian view, but I think when we see central bank digital currencies, those are what really unlock the massive opportunity globally. So it spans East and West for DeFi. And what that really is it's taking it from being its own parallel universe and plugging it into the banking system, the financial services system broadly, and just like massively expanding its TAM.
Fair enough. Taking a different approach to the chasms that exist in this space, and there are tons of them. I mean, whether it's between DeFi and crypto, or central bank digital currencies and stable coins, or East or West, there are an innumerable number of chasms that exist. Michael, what say you?
I think that hits the nail on the head. I think one of the other things that's going to bridge the gap here is also mining and mining concentration, which I don't want to open up a can of worms here at the end of a great conversation, but I think we're seeing the emergence of some really important players in the mining space, which I think has long been a narrative, and that's in the practice rather that's been dominated by Asian miners. And I think we're seeing the emergence of some really strong mining competition coming in North America and other parts of the world. So I think that's one of the other areas that you're going to see a lot more interaction between these two geographies.
That's honestly a really good point, and could be its own subsequent webinar series about the mining landscape in the West and East. Andreas, make a note of that. I don't think we've done one on those, but that could be really interesting. Thanks, Michael.
Of course.
Dan, what say you?
Right. I think first of all, we definitely believe the derivative market is gonna explode in the next 3 years, and on that path to a much bigger pie, the role of the West and the East. I think there are many ways of looking at it, but in general, my point is we think East will take bolder moves in terms of more complicated products, in terms of basically more bold moves, given the unregulated space, given the prevalence of miners who basically are aggressively doing new stuff. And combined with that is the West continue to provide be able to provide liquidity on the basic products, and also on the regulator perspective, pioneering getting deeper into the derivative space, and eventually the East will take it from the West and adapt it on a broader audience. So yeah, I think that's what's going to happen to the derivative markets, and we're really excited about that.
Thank you. Kyle?
I think that crypto should almost always be collaborative, composable, and interoperable. And the more that you are, the better you do. I think that like in the DeFi micro ecosystem, the projects that are follow that the most are the most successful. And I think that's true across the board. By the way, it doesn't have to always be fully decentralized. It's a spectrum, right? There can be centralized counterparties which act as intermediaries too. Ideally, over time, it becomes more decentralized. But basically, the people that are the most collaborative, the most composable, the most interoperable will be the winners globally, not just in East or West, globally.
Indeed. Well, ladies and gentlemen, thank you so much for tuning into the latest installment of the Blocks APAC Focus Seminar, The Exchange. And this was quite an exchange this evening, this morning, for our folks tuning in Asia. Thank you so much. Enjoy the rest of your day or night, wherever you are in the world. And we hope to see you again soon. Thank you so much, gentlemen. Talk soon.
Thank you.
Thanks, Frank.
An extra special thanks to Michael for getting here. We were really we were nervous. It was a close call.
happy to have made it.
Oh my goodness! Be still, my beating heart.
Stay safe, everybody.
Be safe. Stay healthy.